And that means we are live here on YouTube. Tackle Trading's halftime report. It's 127, 2020. Closing out the month of January here in the next few days. You got a Fed meeting this week. We've got a gapping market coming into the overnight action and starting the week out, reacting to the coronavirus and what's going on internationally with the risks there. We've got Mark, we got Cody, and we're going to break down all the information, all the action for you here on our YouTube show. Mark, how you doing today?
Yeah. Listen, and normally I make light of that. Whenever you have people dying to a virus, and then the Kobe Bryant situation yesterday,
that was awful.
You're just gonna be a little melancholy. So I don't want to make light of the pleasantries because I'm just not having a good morning. Just because real life things weighing and human tragedy, and it's sad, and you wish. It just sucks.
It does suck sometimes like that. And quite frankly, the Kobe news was incredible in so many different ways. And I was really thinking about this, talking to one of my buddies who, Justin Booth, and we used to go to all the ball games together and watch Kobe beat the Jazz all the time. And we're like, what is it about this news that is such a different one? It's obviously just a ball player. There were 9 people on that helicopter crash. Hearts and thoughts and prayers go out to all of those people, and being with your daughter, 13 years old, that's tragic as well. I'm with you. I'm melancholy in that way as well, but there's something about that is different. I don't know what it is.
I think it's because he was such a well-rounded athlete. He wasn't, like, he was a great athlete. He was a devout Catholic, and like went to mass that morning. And he helps the community. He was just a good person. So when you have an athlete that's not just athletically gifted on the field, but also does so many things off the field and is just a good person, that it just, your hearts go out for him for that reason. And then with his daughter being on the plane with him, and there's so many clips of him and his daughter's relationship, it does hit the soul.
No, the thing with the daughter, I mean, that's what really breaks my heart on the whole situation. Just because, there's a wife and another daughter left behind that have to deal with this grief and tragedy. And, these type of things happen every day in the world. They don't make news headlines. And so when they do make news headlines, and it's just hug your family close. The one thing I'll say about Kobe Bryant, and I always hated Kobe Bryant because he was a Laker, and I hate the Lakers with a passion. But there was Kobe always sticking in him anti-Laker fans' faces because how great he was. The thing that I always admired about Kobe Bryant, and always will admire, Kobe was, I heard some sportscaster today use the phrase, the personification of will. And Kobe Bryant was a fierce competitor. Just the willpower to succeed. It's one of those things that so often in our trading, in our entrepreneurship, in the things that we strive to do and become excellent at, we don't have a fraction of the willpower that Kobe Bryant had. Kobe was 100% determined to not just succeed, but to become the best, to push the limits, to just absolutely dominate in every possible way he could. Sometimes as traders, when you want to look at that, if it doesn't come easy, traders are like, oh, I can't do it. They give up. There's not that will to succeed, to take control of your future. Kobe Bryant was the personification of will. When I heard that statement, I was like, that is so true. Like, it's the type of personality that truly can motivate. And we should remember that greatness, that desire, that the desire to become great, to succeed. There's a lot of lessons that we all can learn there from his life.
Yeah, I love that, Mark, because as a trader, especially a new trader, your goal should not be get rich quick. Your goal should be survive and learn.
And how do I become the best trader there is? So often we get caught up in this, well, did my credit spread? Did I make a little bit of money? And so narrowly focused on the making money part, that's not what's going to make you great, and that's not what's going to get you rich. Wanting to become great at trading, becoming the best possible trader and investor, and just truly having that passion inside you. If you're just here to get a quick buck, maybe you will, maybe you won't. But if you really want to become great, if you want to channel your inner Kobe, and how many people where you just say the word, the name, the one name, the share, Madonna, Kobe, not a lot of them out there where you say the first name and you know exactly who you're talking about. So
He was a competitor. There's no doubt about it. And sheer will. I agree with you, Mark. And there's so many things we love about athletes in sports who achieve the greatness like Kobe did. Sad day, tragic day. Really, still trying to noodle through it myself. And I think that's just what happens in 2020. You have instant news headlines. Things are going to happen, and then boom! As a society, we're all processing something. It's a unique time to be alive. There's no question about it. But we're going to get onto the markets. We're going to break things down. We can talk more a little bit about this when we get into the podcast. Guys, markets gapped down over the weekend. And obviously, you don't normally get a market gapping over the weekend, Mark, but on a Monday morning, I've seen it a couple times in my career, several times, maybe once a year or so, where you'll get a significant gap. This is not a crashing market. Let's start with that. We're not in full-blown panic mode. We are not, the headlines as you read them on CNBC, Market Watch, or wherever it is, you would feel like the market's going through a crash right now. Now, you had a bearish engulfing candle on Friday, and now we've come back underneath the rising 20-period moving average here on a Monday. Got a little hammer tail in there, Mark. You got an overall uptrend over 3 months. I don't know where it's going to go tomorrow. That's not my point here, but we're not crashing. How do you assess the volatility here, Mark?
We're in a very unique situation, and we're going to do a lot of the podcast today at tradingjustice.com on the coronavirus. We have a very unique situation. If you're a pro member, you can go check out right now the commodities report from this weekend. Spent a lot of time talking about it, and it's a unique situation. It's a big subject, but we have over the last 2 years kind of a playbook in how to handle this situation. And I think the trade war and how price action occurred during heightened moments of the trade war give us a good playbook in how to analyze price action in this particular situation. Mm-hmm. So while the particular situation is very unique, there's definitely some different elements to it. But just from a price action standpoint, I encourage you to go check out the commodities report this weekend, video portion. I spent a good chunk of time breaking down the analysis there for pro members. If you're not a pro member, send me an email at team@Trackle Trading. You really want to watch that and I'll get you set up with a free trial to watch that. But, 30-second breakdown. As long as this escalates with the coronavirus, as long as you have more deaths, a spreading of the virus, both there in China and outwardly to other countries, you're going to have a rattled market. Mm-hmm. And you're going to particularly be rattled in areas that are sensitive to China itself, specifically Chinese stocks like BABA. Go pull up BABA and you're going to see that while the market is down today, look at BABA. Look at that gap down. That was what, a 17-point gap. Mm-hmm. Rallying a little bit off that 200, 200 price level, but that was a huge gap. So oil, copper, Chinese stocks, things that when we were looking at the trade war were extra sensitive to the news surrounding the trade war. Because China itself is involved, and China is a large consumer of copper, large consumer of oil. Chinese stocks obviously front and center with their domestic operations there.
Even some U.S. stocks that have exposure in China.
Exactly.
McDonald's had a good gap down this morning, but it's recovered a lot of that. Nike, I think, has about 70% exposure, so it gapped down quite a bit off Chinese news.
No, Apple, absolutely. Like stocks with particular exposure to China, we saw this playbook with the trade war play out. What did Apple do during heightened periods of the trade war? Got hit. What did some of your semiconductor companies do? Got hit. Chinese stocks got hit. Oil got hit. Copper got hit. So while it's not apples to apples, there is definitely some Apple-esque no pun intended, as we're looking at Apple, there really wasn't. Like parallels here to how price movement during the trade war occurred, how certain areas of the market were particularly impacted during the trade war, and what's happening now with the coronavirus. So traders that have been trading for a couple of years, you do have a pretty good breadth of historical price action to reference. And what did you see? So this is what happened during escalation. And just like during escalation, when it de-escalated, what happened to those companies? What happened to those areas of the market that were really impacted? You saw really huge, significant rallies. So we have a playbook in which to work off of from the trade war on price action. Now, the one thing we don't know today, just like we didn't know during periods of heightened trade war, is when is it going to end?
Yeah.
When is that turnaround going to occur?
Yeah.
Is the sell-off going to last for a week, 2 weeks, or is this the end of it? And I really think my opinion on this matter, and I think it's pretty, I mean, it's not exactly going out on a limb. When you see those numbers of case and outbreaks stop increasing, then you might see a little temporary bottom come into place. But we obviously don't know when that's going to occur.
You know, Cody, what do we know so far about the virus? I mean, I was reading the headlines like everybody else here this morning, and I love the price action breakdown there, Mark. There was 81 confirmed deaths so far, 2,800 cases here. Obviously, it's expanding. It's affecting travel and all the different companies have that sensitivity. But what do we know?
Share a website that's really, really good. And so this one here, and I'll drop the link in the chat if you guys want to check it out yourself. But this is a really good means of tracking, what's happening very closely versus, outbreaks where cases are, total death count so far, total confirmed so far. So, and this is, like it said, last updated 8 minutes ago. So this is like a live way to track, and you can zoom all the way out and see around the world. We had some in France that happened. We had some in the United States, a few cases, and this is something really cool to watch if you want to follow what's happening. But obviously right now, it is still mostly isolated China. We do have a few breaks here and there, but as long as we're finding them, people who are bringing it to other countries, they're being isolated pretty quickly in the hospitals in the other countries, which is a way that you can help contain the virus. But overall,
and I believe all of the cases, 5 was the number in the United States. I believe they all had traveled from China to the United States.
Yes.
And that there have not been any spreading cases that have occurred in the United States from people that weren't in China itself, which is a huge deal. Like, think about it. It can't get really bad if it doesn't spread beyond people that visited China during that time period.
Yeah.
So as long as
overall,
there isn't,
I was going to say overall, and I just don't want to go into too much detail because we're going to go over it in the podcast later. But what we know about it is, so coronavirus is actually a class of viruses. There were 6 known coronaviruses. This became number 7. So that adds a little bit of fear there because it's new. There's no like research that's been done on it, because once something is discovered in the world, that's when researchers will start picking it up and look at it. So it's a little scary in the fact that it's new. Scary fact, it's an unknown. Okay. The other one is its incubation period, meaning when you contract it to the time you start showing symptoms, that period is about 14 days, 2 weeks that you can be sick and not know that you're sick. Add to the fear on that is during this time that you're sick, you can still spread it even though you don't know you're sick. That's kind of scary as well. Versus SARS, which everyone keeps comparing this to. SARS, you show symptoms of having SARS and you can spread it at that point. So it's a little scary that you can spread it without knowing you're spreading it. And the third thing that makes it scary is that it's a zoonotic disease. So trying to figure out how to study it, you have to first start with, where it came from. So they got to figure that out. They suspect it came from bats or snakes. I lean a little bit towards bats, and I'll explain that in the podcast. But really, the thing that's scariest about it is the fact that it's unknown. Yeah. Like that's solely what it is that it's an unknown virus that as soon as they realize it's there, they started looking for it. Once you start looking for it, you find more of it. And
And
that's
Mark,
kind of why it's scary.
well, no, I love that, Cody, and thank you for the analysis. And we're going to go through a lot of this in the podcast as well and have you break a lot of that down. But Mark, that word unknown is one of the reasons why the markets are selling. It's not necessarily because of some direct GDP that it's got negativity that's going to affect China in the long term. It's the unknown of how this can be contained, if it's going to be contained, what it might spill into. And so the markets have a tendency to sell and then ask questions later. I mean, we've seen this in the history of our careers, watching the markets. You get this unknown factor from a disease or something like this coronavirus, and then boom, it comes down. But until the price action spins further out of control, Mark, do you think there's a buying opportunity in here?
Listen, for me, there is zero buying opportunity until you see, because think like a computer, think like an algorithm, think like be heartless of this. Until you see contraction, until you see stability, until you see, that occur, you'd never want to try to be the smartest person in the room who's like, well, I think, and I'm going to guess. No, like I'm playing it totally safe here. Like, I am not going to say, well, I think according to this. No, that's nonsense. It's stupid. It's hubris. It is human hubris at its worst.
What you're going through right now is actually what I just did the write-up on in the Forex report. It's known as the Dunning-Kruger effect. Someone will read one article and they suddenly get overconfident that they're an expert. Where it's like people who are actually experts and have a lot of experience don't feel like experts. So just because you read one or two articles, don't try, like you said, Mark, I love, don't be the smartest person in the room. Don't try to be the smartest person in the room. And so, guys, if y'all want to learn about that effect, go check out the Forex report. I did the write-up and Noah did the video on that.
I mean, this is definitely a week, aside from price breakdown. I mean, reading those reports from this weekend, that we put a lot of time, a lot of thought, because we know people are preparing for their week. They're trading, their investing decisions, all that. They're always front and center in our pro product. Seriously, sign up for a pro trial. Sign up for a pro trial. You'll see the depth and quality of those reports. Getting back to your question, Tim, two things. One, I want to see a certifiable slowdown, reversal of the actual disease. And then that's never good enough, because once again, that's my analysis. My analysis might be wrong. This old human brain, I like to think it's smart, but where I'll really know, once I have that theory, I'm like, oh, data looks good. I want to see my technical signal on the chart confirming my bias, because I'll analyze the news. I'll develop a bias that, okay, it looks like X is occurring. I want to see a technical signal on the chart. I want to see a short-term reversal pattern occur when that happens. And then the chart itself will be the signal for me to do whatever trading action I want to do. So I'm looking for, analyzing, will share whatever my thoughts are. I'll be on the halftime report all week. But once again, that chart is smarter than you. Those technical reversal signals are our bread and butter to success. You want to become Kobe-esque. You want to become the best trader you could possibly can be. Let that chart help determine, not even help, let it guide you. Let it be the factor that pushes you, that guides when you enter, when you exit, how you manage trades.
And looking at the charts, by the way, right now, I'm on the intraday charts on the S&P. Go down to an hourly chart real quick here, Cody. And Mark, it's a long ways away from any kind of confirmation point. I know we've got a hammer candle. We're talking about it. I loved your analysis. And if I'm looking down here on this hourly chart, we're still below hourly moving averages. We've got gap fill points. Now you can day trade. You could have day traded all day today. Playing on volatility days like this is what day traders love to do. But this is just a little bit of a bounce back off the bottom, bearish retracement developing until I get above, oh God, even the gap fill mark at 32.80, maybe even higher. I think you're probably days away from having confirmation. What do you think?
I mean, there's, in this situation where you're above certain longer term moving averages and below shorter term moving averages, I mean, you have this broad pinch where algorithms and day traders are doing all kinds of stuff.
Mm-hmm.
It will come down to certain support levels and they'll buy, but then it will rise to certain resistance levels and then they'll sell. You know, the machines are relentless in these situations and they do a great job. I mean, you see right now, comes up to the 20 hourly. What happens? Slap down as
Mm-hmm.
profit taking occurs from people that might have bought short-term support bounces.
Yep.
And so you can see a lot of true technical battles where you have resistance and support levels on multiple time frames collapsing. Now, you do not have to become a master of all of that to be profitable. You just have to be patient. Wait
Mm-hmm.
for the signals on the time frame you're looking at come. But like right now, I mean, we're just in a big mess. Negative news story pushing things down, but our overall trend has been bullish.
Yeah.
Moving averages above, moving averages below. It's just a big mess right now from a technical perspective, depending on what time frame you're looking at. And patience can really pay off in these situations.
Well, there's always a trade somewhere, obviously. Whenever you're going to play defense first here. Yeah, I mean, that's the way that I approach a day like today, Mark. I don't go out there looking for new trades right away. I go in there making sure my delta's in line, I'm in control, my gold positions or my hedges are in line, all those kind of things. Play defense first, assess the volatility, assess the risk, then come in and find some new trades through the week is kind of my approach mentally. Guys, Dow, S&P, NASDAQ, Russell, they all kind of feel the same to me. Let's move on to the dollar. Got to tell you, just ever so slowly and ever so dramatically now, we broke out here, Cody. You know, what's your read on this US dollar index?
It did get a slight upgrade to leaning bullish, still in neutrality, really because we want to see it kind of continue. Let me back out to that weekly. Because it had a nice trend line that it was going up on and it broke below it. We want to see it get back above that to continue that uptrend. So we're kind of seeing a slowing momentum into neutrality. And right now, I mean, we had a W formation followed by an M formation. Now we have an inverted head and shoulders here. There's a shoulder, there's a head, there's the shoulder. Break out of the neckline, which we got. So I would like to see either fade up and actually get back above this level here around 98.50 or so, or actually give me a bounce back to its neckline and then from there continue upward. So it's neutral. It is moving bullish, but it's hard to actually swing trade this as of now. Yeah. Follow it, watch it, day trade if you're so inclined. But what I find interesting is as I look through each of these, I mean, the cross pairs to try to see, okay, what currencies are moving with the dollar? What currencies are allowing the dollar to get some strength? And you see some like the euro is obviously, it broke down from that. But you have like the British pound. Let me clear this out. British pound doesn't seem to be moving too much. It's still got a neutral wedge type pattern. So that one's really not moving. The Canadian dollar, which had a fantastic short setup, but never triggered. And instead it's moving, letting the dollar get some strength.
Well, and stay right there for a second, because so much of that is just crude oil weakness. You know, when you're trading currencies, you got to understand what impacts specific currencies. The Canadian dollars and the Canadian economy is so sensitive to crude oil prices that when crude is dropping like it is today, the dollar CAD cross pair is going to move the way that it is. I'm with you right there. But I'll tell you the one that grabbed my attention, Cody, was the Aussie and the New Zealand.
Yeah,
because
I was going to bring those up.
Mm-hmm.
And this is so curious to me because the Aussie and the New Zealand and the Canadian dollar actually are not only sensitive to oil, but they're also based in gold.
Mm-hmm.
Gold's up and these currencies are dropping, which speaks to how much oil does affect them, even though they are closely tied to gold. So yeah, these completely went the opposite way of what they were doing. They were some of the more bullish currencies in recent reports. And yeah, it's completely given that up. And you can see the head and shoulders here on the Aussie dollar that broke down. Mm-hmm. So yeah, the Aussie's giving stuff to the US dollar. New Zealand's giving away to the US dollar. It's got a little harder head and shoulders to see, but it's still there. And you look at some of your more reserves, like Japanese yen, you know, not really playing as much ball. You look at your Swiss franc, another one of the reserves, not really giving much movement. So to me, it looks like we're seeing movement into reserve currencies. So like the US dollar versus the Swiss franc and the Japanese yen, which are also reserve currencies, we're not seeing movement there. but we're seeing movement out of some of the non-reserve currencies into reserve currencies. So I think that's one of the reasons we're getting some strength in the US dollar, is that we're seeing money move into the US dollar out of other currencies, not the Swiss franc and not the Japanese yen. So all these things coming in and together, you can kind of see that when things do get a little cautious out there in the world, money does move to make sure that there's protection within these portfolios.
Yeah, they call it a risk-off movement in Wall Street terms, and we're seeing that here today. There's no question about it. Speaking of risk-off, that's also crude oil right now. And Mark, I loved your commodity report over the weekend. By the way, I came in from traveling. I was out in Brooklyn, New York City, having pizza in one of the greatest cities on the planet, and teaching a class for legacy education. Came home. And one of the great gifts of tackle trading is all the reports are right there. And I went through the commodity report and it got me ready for the week. Crude oil, it's a falling knife right now. But we've seen this falling knife hit this same location for a year. 52 to 50 mark. I mean, this is support in here. I mean, how are you going to approach it? Because I know you've got to at least be interested this week, next week in these price levels.
Well, here's the thing, and I went over this in the commodities report. Saudi Arabia made headlines. Those Saudi princes have my back. I know that. They came out again to saying, hey, like in our March meeting, all options are on the table. Basically telegraphing to the oil markets that we will do what we have to stabilize price. They've been consistent on this message for years. Here's the problem. For that one headline on Saudi princes having your back, there were 4,000 headlines on the coronavirus and how it could impact China and how it could impact the oil markets. So all of that bullish headline, which is a huge overarching, which will come into play at some point in 2020. Yeah, they're getting dwarfed by headlines on the coronavirus and China GDP and China oil consumption. So what does it take to break a major support level? Usually it takes a significant catalyst. Well, we have a significant catalyst right now. Now, it could all evaporate 2 days from now, and there could be stability. And then I will be singing a different tune. Then I will break out all of my bullish oil rants, Saudi princes, OPEC doing what they can. But right now, we're in the middle of a significant situation. Oil is one of the heightened areas of the market that news stories surrounding China will impact larger than others. Oil, copper, Chinese stocks, you're starting to see the bleed over to companies that have exposure to China, as Cody mentioned this morning. But oil's front and center. Before the sell-off in the markets started to occur, oil was partying to the downside off of the coronavirus scare before that. And so you have a situation with oil that is at the front and center of a significant news story that is greatly weighing on sentiment. We got a really huge support level here. Absolutely.
That's a fantastic point, that the oil acted as a barometer to what the market was going to do, and it did start moving.
So did copper. Go to
week.
Copper. Go to HG. Once again, copper. Remember the trade war in copper? Copper was also ahead of the equity markets. So you saw copper and oil, which are ultra sensitive to stories impacting China, get the ball rolling, and look at the sell-off that's occurred in both markets. They really foreshadowed the impact that it might bleed over into other areas well ahead of the game.
This is exactly why, even if you don't trade futures and commodities, you need to be following futures and commodities.
Yeah.
That's something I've said for my whole, well, as long as I got passionate about commodities about 3-4 years ago.
Yeah.
And I definitely believe that. So like when you look for buying opportunities, because on copper, once again, coming to a massive historic, I mean, this chart doesn't even do it justice. The support level that goes on
weekly?
copper. Like you have a multi-year support level that copper is coming down to. So from a technical perspective, buying at support is usually a good deal. it oftentimes plays out and is like a great place to purchase, and you get in just like when copper came down off trade war news last summer. But whenever you're in a heightened catalyst, once again, rewind to 10 minutes ago, don't be the smartest person in the room. Exercise patience. Wait for solid reversal signals, solid stability patterns to emerge. There very well may be an excellent opportunity to get into oil, to get into copper, to get into Chinese stocks, to get into a lot of different areas of the market, to the market itself. But we do not want to be the smartest person in the room and try to guess this. We want to see a stabilization and reversal of these storylines coming out of the coronavirus. And we want to see, just in case we're wrong in our analysis there, we want to see those technical levels develop, give us reversal signals. Could take weeks to play out. God, if this is a really significant story and that spread keeps happening, it might take months. But there absolutely could be an opportunity here. We just need to be patient. Need to be patient.
You know, here's the other bottom line about it. This week, guys, we also have major earnings coming out. We have a Federal Reserve meeting. The headlines are not going to lighten up this week. This is going to be a very, very important week for the market. How does it handle to the volatility here on a Monday morning? How do we react to it? How do we come off of it? But then just listen to this. Federal Reserve meeting on Wednesday. 3M, Pfizer, AMD, Apple Computer, DR Horton, Boeing, Tesla, GE, Microsoft, Facebook, PayPal, McDonald's. I mean, we're talking major corporate earnings, UPS and Visa. We're going to have a lot to talk about on these halftime reports day over day over day as we go. For right now, markets are down. Markets are battling back intraday, and then that's kind of where we are. Let's keep looking at some of these metals markets, though. I do want to talk about gold. You guys mentioned risk on versus risk off, and obviously a risk off type of attitude would be money flowing into the precious metal here in gold. Market's not up as much as I think it might, could have been, and it's only up about 1/3% here. Got a resistance up here at 1,600. Part of this might be the dollar's also up, and we're pricing gold here in dollars. But what you read on the precious metal here, I'm still bullish. I'm assuming you're still bullish, Mark. You're on mute.
Muted.
Boy, there's a lot of people that would like that mute button on me on occasion. Wouldn't it be nice to just mute Mark when we choose to? Actually, nobody thinks that because I'm awesome. But come on. It's a technical signal, bullish. We got all kinds of things propelling gold. Whenever you have a world event, whether it's Iran or the trade war, in this case, the coronavirus, that's always a potential catalyst to the upside. You have monetary programs around the world with loose money, cheap interest rates, quantitative easing, no matter if you want to call it that or not. Gold's got everything working for it. I mean, the only thing that gold doesn't, it's the same story that's been going on for over a year now on gold. The only thing gold doesn't have working for it is, you're at really elevated levels. You're at really, really elevated levels. And so it's like, this has been a nice short-term trading signal that started to play out a little bit. But you are coming against resistance levels, right? At 1,600 in that range. So has been more of a short-term swing trading, scalping, day trading type environment. But when there are signals on gold, day traders and short-term swing traders that look to take quick profits have been all over them, just like they've been over the last 3 days.
Yeah, definitely. I mean, that volatility is going to create those opportunities over those time frames. I've been approaching it as a position trader for a long time now. It's kind of the way I think about gold. Investor, position trader, leave the other time frames for another trader. And there have been opportunities, no doubt about it, but I do like this technical signal here. Let's keep moving through the markets here. One thing we do each and every Monday, Cody, is we look at all the sectors. Let's go through the XLs real quick if we can and take a peek at where we're at. Now, obviously, these rankings would be massively upgraded or downgraded depending on which one we're looking at. Start with the energy sector, and it's the most bearish one we have. We won't have to go through all of them, but Guys, energy stocks, I mean, oil down and XLE now breaking below support. Mark.
And this, I mean, seriously, what if like kind of the theme of this morning's show, aside from sharing analysis, has been don't be the smartest person in the room. We're in a catalyst. What did I just say on oil? We're in a catalyst. So even though there's a support level, I mean, this is a real story. Look at that support level that broke on energy.
Mm-hmm.
Like support and technical analysis, and I talked about this on Saturday. It has one kryptonite. Just like Superman, technical analysis is awesome, but it has a weakness, and its weakness is volatility. What causes volatility? Well, news, oftentimes. And when you have an actual story, technical analysis, support levels, resistance levels, they can be at their most vulnerable. And we're seeing that in energy stocks. Support level, that's nice, but if you were trying to be the smartest person in the room on Friday and buy at support without confirmation, well, you did so in the middle of a huge news story.
Mm-hmm. Mm-hmm.
That if you knew how it impacted oil, how China impacts oil, it's not surprising at all to see this support level break.
No, and it definitely is a significant one on multiple timeframes, including the weekly, but a major support zone broke there. A big downgrade on the newsletter as well. I saw that materials had a downgrade. Makes sense to me. I mean, especially with palladium and copper, like you guys were talking about. XLB here, if we want to take a look at that, that did gap down a little bit here as well. Financials downgraded. Now, materials were downgraded to neutral over the weekend. Financials here, Mark, that's a very significant change in the chart pattern. I know not every sector has this kind of change, but don't you see momentum change here? Don't you see everything kind of rolling over now?
Yeah, I mean, and once again, this is a really complicated situation, just like the trade war. When the trade war broke at the start of 2018, what was it, March of 2018?
Mm-hmm.
It was really complicated trading environment. I mean, let's be honest, last 3 months have been easy.
Yeah.
Like if you haven't been making money in trading the last 3 months, you need to evaluate what you were doing, because this was really, really, really easy conditions. That's not what we find ourselves today. Now, there are certain traders that have been like, oh my gosh, I've been waiting for this to happen. I've been waiting to day trade to the downside. I've been waiting to do various different strategies. But for your average trader who does swing trades, who does bulk call spreads or buys a call or buys stock, really easy environment the last 3 months.
Mm-hmm.
That's not where we're at today. The patterns become more complicated. The analysis of the sentiment becomes more complicated. A new story that that's ongoing. An ongoing news story that we do not know what's going to happen tomorrow really complicates it. So what were easy patterns, and guess what? There will be a time in the future where patterns are easy again, where signals are easy again, where the market analysis is easy again. But right now, these shifts in momentum are really difficult from both a technical and an overall sentiment, fundamental way to gauge it. And so you're going to see some really tough patterns like you're doing on financials right now.
Yeah, I think that financials gap down, it really throws into some complexity. By the way, there's still a lot of good setups. I did go through the stock and option report and saw some individual companies that we're going to get to here in just a minute. A few different moves, by the way. XLU, XLP are the strongest performers today in terms of holding up. XLP is actually about to go in the green for the day. XLU holding up here at the top. Mark, when the markets play defense, they move into staples and utilities.
That is oftentimes the case.
Yep. And you got to like that actual staples pattern here. You broke out, you pulled back, you found the moving average, you got a green candlestick. If you're looking for areas of the market, there can be them that you might be able to find earlier than later.
I love breakout pullbacks. It's like a secondary confirmation on the initial break. I love breakout pullbacks.
Breakout pullbacks. I like them as well. Well, if you do like a breakout pullback, you'll like ULTA, ULTA today. Saw that one on the options report. And I got to tell you, it is attractive in that way. You broke out of resistance, you pulled back, hit the moving average. You got a big fat green candlestick here today. Must not be sensitive to the news here, Mark. Not all stocks are.
Well, and here's the thing. Like, if you're like cautious about doing anything, who is doing well on days like this? Where is their real strength? Where is their real momentum? Where is their real potential trade setups developing? And when I see a candle like this, that, yeah, gap down like everything did, but the gap wasn't that big, was it? Especially on a big stock like this that can be really prone to really wild swings. That's a really, from just analyzing this from a technical perspective, there's some real relative strength here.
Yeah.
In what is a really nice pattern in and of itself, and then how it's responding in its price action today compared to where the market is, where sentiment is. There's some juice. There's some juice there.
Definitely. And by the way, I'm also seeing some action in like the Walmart, Targets, Dollar General, Costco's of the world. It seems like just a rotation into some safety. Procter and Gamble looking pretty good as well. I don't think the Walmart chart is that tradable, but man, you're seeing some strength. PG here. You want to talk about a safety play at the top of a breakout potential? You got earnings coming up, but there are going to be charts you can trade. That's the point, I guess, that I'm trying.
Oh, absolutely.
I think they're post earnings here in P&G, so you don't have to worry about that.
Nice. Speaking of earnings, by the way, tomorrow morning, Lockheed Martin, 3M, Pfizer, United Tech, and then a bunch of other ones we're going to be breaking down throughout the week. Guys, get out there and do some good, run your accounts, manage your risk, and kind of join us each and every day. We'll break this down with you and help you understand what we're seeing the best that we can. Volatility in the markets. Everybody wants a pullback till they get it, Mark. It's funny how that works. And how do you react to it? Are you prepared for it? You ready to rock and roll? We'll see.
I mean, I look at copper. There's a couple areas of the market. Like when you get to copper and you get to oil, these are two things that I have been waiting for a bit for big pullbacks.
Mm-hmm.
And so it's just now, for me personally, and the advice I give to others, it's about that patience.
Mm-hmm.
It's like, why risk it? Like that's what I ask. There's that fear of missing out, and people feel it like, oh my gosh, if I don't do something to now, sometimes becoming Kobe-esque and being the best trader you can be is putting your hands under your butt, sitting down and doing nothing.
Yeah.
Exercising discipline and patience. Kobe didn't take, he shot a lot, but he didn't like take every shot. Sometimes he waited, he waited for good opportunities.
Yeah. And he competed every day. I love Kobe Bryant, and actually I've been thinking about it all day, obviously, and yesterday as well. And I know we started on it, but still thoughts and prayers out to that family and everybody affected by it, and hug your kids a little bit closer, pick them up from school, and spend some time with him because, he was there with his daughter, as a father, 13-year-old kid there that died as well. Very, very tragic. Guys, we are like a ray of sunshine here today. We're talking about epidemics and diseases and people dying and all these tragedies, but that's life. We share these moments and these experiences together. There's no question about it. Markets are going to move up and down. You run your accounts day by day. You go through your routine news, market analysis, manage your trades, put on some new ones if there's an opportunity out there, but always trust what you see on these charts. Mark, heading 2 hours into the last of today's trading, what is something you would want to watch for? I'm not saying it would be a trigger. What's something you want to see here in the last?
Listen, if you're not a day trader, we just don't have, we don't have enough. We're not going to get some magical report out of China that everything is well and, business as usual. You're just not going to see that. Now, day traders will have their own signals, the management of the positions. You're not going to see that magical anything in the last 2 hours.
Yeah, this isn't a trade war that can be fixed by a headline or a tweet that things are going well or anything like that. You're not going to get a headline that says all of a sudden, cure came out.
Mm-hmm.
Not going to happen.
No. And so watching the overnight volatility is going to be key, and then continuing to manage that risk day by day by day. Guys, if you're out there watching our show right now, welcome out. We've got 80 people here, only 25 likes. Everybody give me a thumbs up real quick before you leave. Let's get the analytics out there for our YouTube channel and start growing this thing. Cody, we popped 6,000 subscribers, and in the last couple of weeks, we picked up like another 130 people watching our channel. So that makes me very happy. We want to grow this thing to be the biggest presence out there on YouTube to help people understand the markets. Share this if you can. Invite a friend if you can. You know, one of the best things you can ever do in life, Mark, is word of mouth, kind of a referral. If you've got somebody in your life who you know is a trader who would benefit from joining us every day and watching the halftime report, tell them about our channel.
I mean,
Get the word
the
out
plain
there.
and simple fact is the analysis you get here on the halftime report is unique and different than anywhere you can get anywhere in the world. And I say that with zero hesitation. You have the doom and gloomers like Zero Hedge who only want to scare the hell out of you. You got people on CNBC and the mainstream market where they literally want to say stuff to get headlines and to look smart, and they have their own agenda. You get real analysis. Sometimes it's really bullish. Sometimes it's, hey, let's be cautious. We do the best we can to be as objective as we can. Sometimes we're going to be bullish. Sometimes we're going to be bearish, depending on what the market is telling us, depending on our read. And sometimes sitting on your hands doing nothing is the best advice you can give in unique situations. But no matter what the situation is here, help us spread the word. Keep watching. We do our best to bring you a unique perspective of the market from a trading point of view. And based on the feedback we get every day, it seems like most of you appreciate that, and we're very grateful.
Yep.
We're very grateful.
100%.
So yeah, like Tim said, give us a thumbs up, because that's what you got to do on YouTube, right? You got to pander for likes. Like, you know, I feel like a homeless person sitting on the corner with a sign, you know, we'll do whatever for a like.
Listen,
so
there's nothing wrong with just being direct with people. We like thumbs up.
Hey,
all
you
right?
got some spare likes? Got some spare likes? Just a little bit of spare like?
You don't have to be so tough, Max Loss. It's okay. All right, guys, we are going to be podcasting today. We're going to be talking about the coronavirus. Actually, we're going to have Cody on and kind of explaining some of the science behind what's actually happening. We're going to compare different periods of time when we had outbreaks, and not necessarily the pandemic that could potentially happen in those doomsday scenarios, but we're going to look at it from a data perspective and try to take the emotion out of it. Look for that online. We'll see you guys tomorrow. We are out.